Welcome. I am Eric with Muathe.com, and I greet you, beloveds, in the love and in the light of the one infinite creator. So, in today's quick educational video, we're going to be taking a look at the concept I've been talking about over the last couple of days. And to save time, I'm going to link that method for your consideration in the description of this video. Alright, so this is where it's going to send you. It's a playlist with lots and lots of examples. So we're going to save time in this video. Lots of examples, and this is the free version. But this should be sufficient, honestly. Once you understand the method, that's all you need. Of course, as of today, about 18 videos in this playlist. At any rate, let's take a look at 3 examples. Let's do it. And like I said, I'm going to go through these ones quickly. My assumption is you'd have paused the video and taken some time to understand the concept. So I'm going to draw a base right here. As I said, I'm going to go through this quickly so it makes sense for those who understand the concept. There's a weekly closing high there. There's a weekly closing low. Now, for context, there is some series of failed breakouts here. Oh, by the way, this is a weekly chart. So when I was talking about Tesla, that was a 4 hourly. You can use this on the daily, 4 hourly, weekly. Here, the weekly chart gives us a good example of visual understanding of the concept. That's why I'm using it. We have failed breakouts here, failed breakouts here. Now, let me put this another way. There are those in the market who somehow know in advance to get out here, get out here, get out here. These are the institutions on the inside, but that's not the reason for this video. At any rate, we see a failed breakdown attempt. Tried to break down here, but kept the base formation. But now, at some point, you can see that there was a violation of this base. This is the second red flag. The second red flag. Right here. Time to get out. For sure, that's $80, give or take. And you would have saved yourself from holding in the mid-30s. Okay, now remember, lots of failed breakouts. These failed breakouts were red flags. Alright, let's take a look at the next example. In this example, we're taking a look at the weekly time frame. Actually, it's the monthly time frame, and it gives us a good visual understanding of this concept, which is my own original concept, and I share this with you for your own consideration. If it resonates, then you can use it. If it doesn't resonate, then that's fine. Throw it away. Alright, so these are the lows and the highs on a monthly closing basis. So there, now we can frame this into a nice, neat box. Right there. And again, we can see lots of failed breakout attempts. On this month, a failed breakout attempt. 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 Guys, these things can take forever to play out. That's about 5 months. 5 months of an attempt to move higher. Now we're talking that breakout is around, just around this 70 price mark. Alright, but at some point we break below the monthly closing low that constituted the low of the base on a monthly closing basis. Now, friends, this, if you understand this concept, this was the second red flag. You got red flags coming from all of these failed breakouts. All of this just did not have the gas. No gas. No gas. Or as I mentioned, institutions who are on the inside are getting out. This is a nice way to get out, or a nice area. They know what's going to happen next. But for retail investors, by the time that we get this break here, that's the second red flag. It's time to get out. Now that sell signal was at about, let's call it higher 70s. Let's call it 57. You would have gotten out of that trade completely out at any time. Even here, get out in the 50s before the stock drops, and ultimately it has gone to touch as low as the mid-teens, 15, 16. But if you know what you're looking for, these red flags here could have been decent enough warning signal. All right, that's the second example. Third example is a weekly chart. And this time we're going to take a look at the exact opposite behavior, because a good technical visual aspect of trading should work on the way down and on the way up. Agree? All right. What we're going to do here is we're going to frame this. First thing we're going to do is figure out where we have our weekly closing low. We got a weekly closing high. And we're going to frame that into a nice, neat box. We have a failed breakdown attempt. In other words, those who are in the know, institutions, are buying this thing here while triggering stops. Now, we can say, based on our concept, this is the first green flag. Things are holding up. And the true green flag, which is the second green flag, is when you move above that base. Now, notice how the market is aware of that level. Because why? Because it gave market participants another couple of retests. Now that is in the 30s. Now, friends, Romans, countrymen, ladies, gents, girls and boys, these things seem to take forever to play out. This is a weekly chart you're talking about. If you're watching this every second, it might seem like it's 1,000 years. But ultimately, 30s would lead to 80s for those who have the patience to play the institutional game, which in my opinion is the only way to play the market. You have to be willing to hold on for many seconds into months. Okay? Let's not forget the institutions who were buying this here in the 20s when it was attempting these failed breakdowns here at the base lows, also managed to are still holding on to this thing. Maybe the other one's getting out now, but it's taken half the year. So, in other words, if you are day trading, it is impossible to enjoy these types of moves. It is impossible if you are day trading. Why? Because your day trade was somewhere right there, or right there, or right there. I mean, you're day trading, so when institutions are looking at the market, this is what they want. Now, trust me, some institution somewhere has been holding on to this stock since this first breakout here. This is in late 2020. So a year ago, they're still holding. What's the rush? And the only way you can own something from 5 all the way to 80, the only way, you have to persevere the test of time and nerves. That's the only way. But because we live in an information overload, let's call it society, it is, I would say not impossible, but for most, the information is streaming real time and tick for tick. So it is hard to play the institutional game. At any rate, this video was about the 2 bearish wrongs, and maybe I should rename this to timing 2 flags. Sometimes it's a green flag. Now, this is the concept, but now you might say that, come on, there's no way I would have known to buy this in October of 2020. Right? You'd say, how would I know that? Really, like, how? I mean, that's very lucky if you can get it at that price. Dang. Well, if you know what you're looking for, as of October 2020, this stock was mentioned at least twice in October of 2020 for paid clients. Not too shabby, I would say. In another instant in November, and it's been mentioned many times since. If you want to pause and take a look at all the other times I've mentioned this stock, here are the other instances, and the most recent one since February was October 12th. Guess what? Of this year, 1 year later. And why the big gap of not mentioning it from October since February? Because it wasn't breaking out since February. The next breakout just happened over the last couple of weeks, hence the most recent breakout alert sent to paid clients in February. In October. And this is the monthly view. This is the weekly view, and it too is a thing of beauty. So if you know what to look for, as I just demonstrated, it is not that out of the realm of possibility to own instruments before they explode. It is something some of us do for a living. And I bring 20 years of experience, so whenever I see it, I see it. I've seen it thousands upon thousands of times. Okay, I know I digressed, but I do apologize. And so it is. I am Eric with Muathe.com. And by the way, all the links are going to be in the description of the video. Consider them in terms of timing momentum and potential breakdowns in stocks. And so, I leave you in the love and in the light of the one infinite creator. Go forth, therefore, rejoicing with a smile in the love and in the light of the one infinite creator. Namaste.